Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective to try to understand where we have the highest probabilities of the next potential move. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video to the end, and I will see you on the charts. In today's video, I want to speak about EURCAD because at the moment we do have quite interesting price action and structure. Starting here in the monthly, in fact, what we can notice is that during all this impulse to the downside, there is one candle not related to the move, which is exactly this green candle here. Now, when you have a strong impulse to the downside and during that move, which is showing very strong bearish momentum, the market creates a reaction to an area which is so strong that actually you have a close to the opposite side of the overall trend that indicates that at that level you have very strong resistance. In this case, resistance because we are approaching it from below. If we were approaching it from above, we would have support because, as you know, in the market, previous support, once it gets broken to the downside, is turned resistance. And at the moment, we are approaching from below this area of previous support and resistance. And what we could expect from here is a reaction to the downside, which is in fact exactly what we're currently getting. So from a monthly perspective, everything is pretty much straightforward. Dropping down on the weekly time frame, what do we have? Now here on the weekly time frame, however, we can see how the structure has just shifted from the one of a bearish market to currently having bullish structure. In fact, the market went from creating lower lows and lower highs to now creating higher highs and higher lows, with the market breaking above this area of previous weekly resistance, which the market was respecting as resistance when it created this red candle to the downside, which now that the market has broken it to the upside is turned support. So at the moment, what we are actually retesting here is a strong area of previous weekly resistance, which is now turned support, which we could definitely expect the market to reject to the upside. We can also notice how this move to the upside is an impulse, and after an impulse, you get a correction. And if you want to measure the correction, what you have to do is take your Fibonacci on the impulse leg. So in this case, from this low to this high. And if we do that, what we can notice is that we have the 50% and 0.32 Fibonacci retracements, which are currently lining up with this previous resistance turn support, creating a confluence of support at this area that once again, we do expect the market to reject to the upside. Dropping down on the daily time frame, what we can notice. Now, from a daily perspective, first of all, I spoke about EURCAD a few times in the past. I spoke about it after the creation of this W. We wanted to see the market create a rejection lower, which is exactly what the market did. From here, I made another breakdown explaining all the reasons for which we could expect this rejection higher. Again, that is exactly what the market did. And from here, I made another breakdown explaining all the reasons for which we could expect this rejection to the downside and then continuation higher, which again is what the market gave us. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. But at the moment, what we must notice is that we do have a market which, in creating this move to the downside, has also created now an M pattern. In fact, we have this move to the upside, correction, continuation higher, and then the market broke down, creating a lower low and basically printing an M pattern. Now, in general, after the creation of an M pattern, what we would like to see is for the market to create a rejection to the upside to go and complete the pattern itself at the previous support turn resistance. Now, in this case, that would mean that we would like to see a rejection to the upside away from this area, which, if you remember, is also the support and demand which we have identified on the weekly time frame, and create a rejection to the upside, completing the M pattern at the neckline. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the euro, we can see how with the last reports, net positions have been growing massively. We went from having a negative net positioning of minus 47k net positions with 249k shorts compared to only 202k longs, all the way up to now having 155k shorts and 199k longs. So we went from having more shorts than longs from an institutional perspective on the euro to now having more longs than shorts, so the completely opposite thing, reaching a positive net positioning of 43.6k net positions. Now, if we go and see what we have on the CAD, we can see how we had the complete opposite. We went from a positive net positioning with more longs than shorts to now having a negative net positioning with minus 21.4k net positions with 57.6k shorts compared to only 36k longs. So the CAD is currently getting quite bearish and the euro is getting quite bullish, meaning that EURCAD could definitely create a rejection to the upside, because a strong euro and a weak CAD is exactly what we need for a rejection higher. So how we could be approaching this potential move to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we use in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower past the testimonials, you will see that at the moment I'm running a special promotion in which you have the possibility to gain access with a discount, big discount on the mentorship program. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment this promotion, you still have the possibility to join it until this time will the clock here will go to 0, because at that point basically the price will increase once again. And you can join directly from here and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does help with the YouTube algorithm, and I will see you in my next video.